Hello traders and investors. Today there was a huge sell-off in the S&P 500. This is the daily candle of the SPY, which tracks the S&P 500, and that's at a 1-to-1 ratio. So we opened up around 431. We closed around 419. That's a loss of almost 3% in one single day. That's a huge move to the downside. We haven't traded at this level. Let me put out a horizontal line to mark out that level for about 8 to 11 months. If we go back on the daily chart, let me scale this down so it's a little bit easier to see the candles going all the way back to 2021, June, all the way to April of 2021. So about 8 to 11 months since we've seen these prices. And this is after coming up on all-time highs at the beginning of the year, January 4th. It's taken us about 2.5 months to lose about 8 to 11 months worth of growth. So what does that mean? Is now the time to buy? That's what we're going to talk about in this video. So we were at 480 at the beginning of the year. Now we're around 420. That is a loss of about 15%. And again, that took 2.5 months to lose 15% of price movement. When was the last time we saw a huge sell-off? It was back here. This is the pandemic sell-off, and that happened in February of 2020. We were trading around 340, came all the way down to about 220, and that's a loss, I'm just guessing, around 35 to 40%. And that brought us back all the way to 2016, that price level. So that's another interesting thing to note. So that sell-off, here's 2016 prices, that sell-off from the pandemic was much more volatile, much more violent, and therefore the bounce was a lot more volatile. We regained all-time highs very quickly. It only took us about 8 months or so to get back to all-time highs and then make new highs. So what does all this mean? This means that since we are down from all-time highs only 15% compared to 35 or 40%, and it's taken 2.5 months compared to 1 month, that the bounce back to all-time highs should be slower. Is that a guarantee? Absolutely not. No one knows the answer to that. But whenever this thing reverses, I think it's going to take a little bit longer to get back to all-time highs versus the return to all-time highs after the pandemic. That's just based off of price action and technical analysis. There's no guarantees, but one thing we do know is that the market has always recovered from these dips. It's always recovered from these losses back to all-time highs in a matter of time and made new highs. That's happened historically throughout the history of the stock market since its inception. So there's no reason why it shouldn't happen again. I mean, anything can happen at any time. These could be the all-time highs forever and ever, and the market just sells off and goes sideways. No one knows, but that's very, very unlikely. So my advice, and I'm not a financial advisor, I'm not trying to tell you when to invest, and I'm definitely not trying to pump up the S&P 500 or an ETF of the S&P 500 because that's impossible. The only thing that moves prices in the S&P 500 ETFs is the price movement of those stocks. So you cannot possibly pump an ETF. So that's not what's going on here. Now, if you do decide to invest in an S&P 500 ETF, one thing that I would suggest is take your time, work your way slowly. Don't just go all in at any price because things could go lower before they go higher. And if you just ease yourself into the investment, you give yourself the opportunity of getting a lower price as the price goes lower. You can do what's called averaging down, which I never, ever recommend averaging down on a day trade or a swing trade. In that scenario, you should have a stop loss, which means that if the price gets to a certain level, you just cut the loss because the trade didn't go your way. But this is totally different. The S&P 500 is for investing long-term, 10 years or more. So in a matter of 10 years, should we be above our previous all-time highs? Absolutely, we should. Is that a guarantee? Of course not, but we definitely should be above all-time highs, and way less than 10 years is the likely scenario. But we just won't know until that happens. So if you do get in now and you ease in and price continues lower, you continue to add to that trade and get a better average, and then you'll be in the green much sooner as the recovery happens. So again, I'm not trying to tell you how to invest or when to invest, just give you some things to think about. And it doesn't matter whether I have 0 shares or 10,000 shares in the S&P 500, whether I get other people to invest in it or they all sell out, it's not going to move the price. That's just not how the ETFs work. So again, That's not what this is about. This is just some price action analysis on the S&P 500. And I hope it was helpful to you. If it was, leave me a like. If you have any questions, leave a comment below. I normally just make day trading videos, so you can check those out if you're interested. And with day trading, which is completely different than the S&P 500 investing, I always like to say, if you're going to go into a day trade, make sure that you have a plan before you enter that trade. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.